Hello everyone and welcome to today's cryptocurrencies update for Friday, September 23. Blood on the street, especially on Wall Street, but the cryptocurrencies are holding up reasonably well. So let's have a look at the charts. Before we go there, never forget Jesse Livermore's 21 trading rules. All right, if it is easy, it wouldn't be a stock market. That's pretty much what it is, or a crypto market, okay? Let's have a look at some of the household items. Please use that to your advantage. And of course, there's always this kind of disclaimer. We always want everything 100% certain, but life is not certain. Life is one big risk. All right. Every single day we take lots and lots of risks. We try to mitigate them. And there's nothing else different with stock markets and crypto markets. Please always have, therefore, realistic expectations. If you set realistic expectations, you underpromise and overdeliver. We do not overpromise and underdeliver. Very cautious about that. I see a lot of people that try to overpromise and then we get underdelivery and we get disappointment because it sets the wrong expectations. So here is Cardano still in the chop zone. It is what it is. It's chopping away. Nothing glorious we can say about this. So please remember, bigger picture wise, this can easily sink down to about 3 cents, 30 cents, 15 cents, or even about 5 cents. Nothing in the chart yet that suggests that we have a new uptrend in place, which on the monthly basis would be a break above 70 cents. That would be a very good sign that we have a new uptrend in place. We do have some positive divergence developing on some of the technical indicators, extremely oversold, but that is about it. If we look at Avalanche, same here, of course, still stuck between a rock and a hard place of about $17 and $22.50. That's a $5 play. I know it's about a 30% range, but the range gets smaller and smaller, and that's simply the floor, and that is the ceiling. We have to watch for the breakouts, and we have to watch for the breakdowns. Because if we get a breakdown, we easily can target to about $7. We really can, and that would then be a 5-wave sequence lower. As you can see here, support is of course at around $12, which is pretty much where we are about. Now we're currently at 17, sorry, which is a little bit below the June lows. Wouldn't surprise me, but the potential is there to go all the way down to $2-3. It is absolutely possible, which would bring us all the way back to the 2020 lows. But let's first look here at about, I would say $7-8. So let me adjust that and be a little bit more realistic. Okay, let's be a little bit more realistic and say, okay, we have to look between $7 and $12. Let's get not carried away and do too dramatic. But for now, I have no signs that we have a new uptrend in place. Nothing at all. We are continuously making lower lows and lower highs, and support is turning into resistance. Please take all those things into consideration. If we then look here at Binance, I'm going to go through it one by one. This is the trend is your friend chart, okay? The trend is your friend. Please mute your phone if you're on the other line. The trend is your friend, not tops and bottoms. All right, the real money is made in trading the trend. The money is lost by trying to nail tops and bottoms. I know it's so exciting to hunt for them, and once in a while we can pride ourselves in nailing them, but most people will not catch them. If they do, they sell at the top and they sell at the bottom and buy at the top because of sentiment. So here you can see a quick overview on what Binance Coin does when it's below the cloud in the 200-day moving average. Okay, and if we zoom out much further, this is log scale, by the way, since 2017, you get a really good idea. Here in red is the 200-day moving average, and the green and red is then the cloud of what Binance Coin does when it's above the 200-day moving average and when it's below the 200-day moving average. I will go over several more cryptocurrencies to really show you where you should really be much more aggressive and where you should be much more defensive. Defensive below the 200-day. Essentially 9 out of 10 of these cryptocurrencies all are strong above the 200-day moving average. Always good upside potential. Might be even brief, but every single time we get above it, it's pretty much good times ahead. The chances of good times ahead are much, much better when we're above the 200-day moving average. So why not wait till we're above the 200-day moving average? And we're catching up on the 200-day moving average for a lot of these cryptocurrencies, okay? It's coming, patience, it's coming. Nothing stays below the 200-day moving average forever, and nothing stays above the 200-day moving average forever. And that you can use for your buying and selling. You have a entry and a exit signal. That's all you need for your trading. Moving on to Bitcoin. Bitcoin can still target 12,500 for a C is 1.618 relationship. If we're going to break below, I would say currently at about 18,000, somewhere around there, we can target 15,000 based on simple symmetry. So 12,500 plus or minus 2,500 will then be our next target zone. That potential is still in the chart. My job is to show you these potentials, okay? And then you have to make decisions yourself what you want to do with it. If you want to be told when to buy, to sell, and to hold, you sign up for my crypto trading alert service. This is simply me conveying the message of what I am seeing in the chart. Don't kill the messenger. And if you have problems with that, sign up for the crypto trading alert service. If anything, it will teach you proper trading, non-emotional, just freaking execute. That's all there is to it. And sometimes we sit on our hands and we miss an uptrend or we miss a downtrend. So be it, that's part of trading. You can't profit from every single move and every scribble. Here is then the trend is your friend chart for Bitcoin. And as you can see, bad times ahead when we're below the 200-day moving average. Good times ahead when we're above the 200-day moving average. So why try to nail the bottom here? If you are in it for the long term, it's much easier to buy it when it's above the 200-day moving average. You have your MACD, you have short-term signals above the 200-day you buy, below the 200-day you sell. Anything you can use. This is all very simple trading. You don't have to listen to me yapping all the time. And if you want to, it's great. I appreciate it. I just want to make sure that you understand the environment these cryptocurrencies are currently in. It's a bear market environment. Look at Bitcoin since 2014. It's been around since 2009. Some charts go back to 2011, but the same deal. Look at this. Below the 200-day moving average, buy every dip. Above the 200-day moving average, sorry. Below the 200-day moving average, you sell every rip. Essentially, every single time Bitcoin gets above the 200-day moving average, it's a bull party. Every time it gets below the 200-day moving average, it's a bear party, okay? That's where we are currently, and I have no signs in place that we have bottomed yet. When we get back above the 200-day moving average, it's party time. Not yet, it's coming. The 200-day moving average will catch up, as we can clearly see here for Ethereum, for example. Ethereum is now around 1,300. The 200-day moving average is now at 2,000. And as you can see back here in June, how far the distance was, it wasn't even on the chart, versus where we are now. So it's great, it's coming, we're not there yet. Patience, it's coming. I bet you it's coming. I'm pretty certain of it, it will be coming. So far, Ethereum is still filling in the impulse to the downside with a little bit of a wave extension. We always start off with the ideal Fibonacci extensions for third, fourth, and fifth waves. We track them then to see if we're really going to reach those target zones, yes or no. Are we going to drop below it, or are we going to fall a little bit short? The market doesn't have to follow, of course, these ideal paths and choose a different Fibonacci extension. As long as we adhere to the rules that the third wave cannot be the shortest wave, and that wave 4 cannot overlap with wave 1 unless we are in some sort of diagonal. But currently we're not in a diagonal. I like it. Wave 3 has bottomed, and then this wave 4 can also become a sideways mess and not necessarily be more of a uptrend short term. Okay, but this still looks very good. Now here is also Ethereum's long-term chart. So quickly back, Ethereum is still following this impulse path to the downside lower. I continue to look lower. I see no reason to turn long-term bearish on it unless we start really going below 1,000. Then potentially 700 to 300 is even possible. Not seeing it yet. Also here, Ethereum, look what Ethereum does when it's above the 200-day moving average, which is what it does when it's below it. Again, this is a log scale chart because I really want to make sure that we also get these lower valuations much better on the chart. But every single time we get above the 200-day moving average, bull party. I'm beating a dead horse, but actually this is a horse that's very much alive. And as you can see, we're starting to catch up on the 200-day moving average. Now you see here these two black boxes. Why? Because Elliott Wave is based on fractals, right? Third waves and fourth waves and fifth waves and all that stuff are a repetitive pattern. 5 waves up, 3 waves lower, 5 waves up, 3 waves lower, 5 waves up. That's your impulse path. Now, how exactly these 5s up, fill them in the smallest of details is something else. Which wave extends, which doesn't extend, the variations of the corrections, all that stuff. It's all nice and dandy, but we want to also look at the bigger picture. Now look here at this square between 2017 and 2019. Okay, essentially in 2 years' time, besides the spike high, Ethereum didn't do anything. All right, so 2 years of nothing. You had to sit on your hands for a long time. Now let's start off first with this peak, which resembles this peak. All right, it's a third of a third wave. Excellent. Now look at this peak. That is your fifth wave. Excellent. Okay, look at this bottom here and this bottom here. It's a fourth wave. Excellent. All right, then we're going to look at this low here, which is an eighth wave, which corresponds with this. The devil is always in the details. It doesn't repeat itself to the T, but you can see here, this is a B wave. All right, and that was here, the spring or late winter bounce. And we then migrated lower. We have some smoosh going on here. And now we are in a bottom that has most likely occurred here. And as you can see here, this is where Ethereum started to rally. Looks like we're about there. You can see also where the 200-day moving average is, right? And the 200-day moving average. And then that was the first wave, and we should be somewhere in this second wave. Then you can see Ethereum rallied, dropped a lot. This is where the moneymaker came in play. That is your true third wave, all right? 1, 2, 3, 4, 5. Unfortunately, retail got sucked in here. Retail didn't get sucked in here. This is where retail sold. Retail got sucked in here. This is where retail sold every single time, right? I've been around long enough to know what retail does, and we're not doing what retail does. We're doing quite the opposite, okay? Again, though, this doesn't mean you should buy here. You should really wait for this trend to establish itself. And you can see here, after we bottomed till we're full on in a bull market, it's almost 2 years later. And nobody said financial markets are get quick rich scheme. Should you accumulate here? Yes, you can. It all depends on your trading strategy. I cannot say one thing that will match everybody. Some people like to hold for 1 second, one likes to hold for 1 decade. So there are many ways to go about, but please remember the environment we're currently in. And even if you accumulate, buy small batches, whatever you do, always have a stop in place where you say, I'm not willing to lose more than this money and I'm out. Because even if you buy at 2000 and you think it's only going to go to 1500, it can still go to 500. And that might be a much bigger loss. You don't want to buy here, sit all the way through here, and then as you can see, you have to wait pretty much 3 years before you break even. That's not how we go about. That's lost time, resources, and money. Regardless, from all the trading perspectives, you can see here we have a nice fractal underway that so far is playing out pretty well. Let's hope it continues this way. So I like this from the bigger picture perspective. We are completing pretty much a 2017 till 2018-19 pattern so far. Nothing out of the ordinary, matches with the 1-2 path I'm still seeing, okay? So I like it. So it's always good to zoom out. Here we have MATIC, all right, Polygon. Same deal here, we're below the 200-day moving average, but we're trying to catch up. Once we get above it, as you can see here on the left-hand side of your screen, chances of good things happening increase tremendously. I say chances. I'm not saying it will only be good things, because we can also have, of course, false breakouts, but the chances really start to increase. Again, the trend is your friend, not the tops and not the bottoms. Try to trade the trend. That is your friend. For now, by the way, the traffic light is full on red. It says stop, wait, not there yet. This is then the wave count. And again, I still like to see this go a little bit lower to about 65 cents plus or minus 5 cents would be ideal. But it can drop in an extended fifth wave all the way down to 48 cents. Okay, so we have no clear resolution yet. We're right now under the floor. So we broke below the floor, retested it. So this starts to suggest that we're in a weak path. But that is logical because the traffic light is full on red. And then last not least, the most boring one of them all is Solana. Also here, stock between $30 and $34, a 10% range. It doesn't get any narrower for cryptocurrencies than this. If the stock market is stuck in 10% range, it's huge. Cryptocurrencies is nothing. You can go back to bed and sleep well. Breakdown, 10 to 15. Breakout, we need to get above those levels, and we have a new potential impulse in place. But also here, of course, remember that we are mostly going lower where support is turned into resistance. So please keep that in mind. So I think I've covered it all. We went from Cardano in the chop zone to its bigger picture that it could go all the way down to about 3 to 5 cents. Same for Avalanche, also still in the chop zone, doesn't look too happy just yet. Can go down to about $7 to $12, not a problem. And then we'll see a bigger bounce, probably back to about $60. So there's still lots of potential in the charts, both to the downside and the upside. The trend is not friendly for any of these cryptocurrencies just yet. We're really patiently waiting for price to break above the 200-day moving average. The good thing is that the 200-day moving average is slowly catching up with price. The longer we stay below it, the more it will catch up. Eventually, we'll break above it. So that's great. Same for Bitcoin. The 12,500 is still not off the charts. Okay, it's still not off the charts. Essentially, we have to break it back above 25,000 to suggest that's not going to happen. Okay, that's pretty much where we're at. Also here, Bitcoin is still in a very unfriendly environment. And longer term, we all know back above the 200-day moving average, party time. Below the 200-day moving average is hangover, and let's all go home. Ethereum, shorter term, still following a nice impulse path. Fourth waves can be very tricky, so we'll just let that one fill itself in. I'm still preferring looking lower to about 1150. Below 1,000, things may start to look ugly, and we could revisit 700 to even 300 if Ethereum so wants to. Zooming out, once again, it still does look like we're really completing a nice fractal from the 2017-2018 timeframe. Everything matches very well because of the third, the fourth, and the fifth waves, the third, the fourth, and the fifth waves. The subsequent correction that encompasses always have an A, a B, and a C, and then the subsequent rally will eventually bring price back above the 200-day moving average. So if anything, this was then, I think, wave one, wave two, 1 of 3, 2 of 3. We're just really potentially in the starting gates of this new bull market. So lots of uncertainty, so please remember that, just in the starting gates. That's where we are currently. MATIC, Polygon, same deal. Not yet there, but you can see we're getting very close to a 200-day moving average. Once we get there, good times ahead. Still looking a little bit lower shorter term. And from then there, I want to see a strong reversal candle to the upside to help me determine that this wave 2/B is complete. And Solana remains stuck in the 10% range. All right, this is yawn, nothing to say much about. Watch the breakdown versus the breakout. Sideways can go either way. It's a matter of interpretation. Sit on your hands, wait and see. That's all I have for today. Thank you so much for listening. Take care, trade safe. Have a great weekend, and I'll catch you all on Monday with the regular email. Bye.